Good morning!
Good morning.
I'm standing over here today so I don't get my head cut off. Ha ha ha. No,
Yeah, cameraman wasn't so great last week. We have this little, hi. And, think we're on there?
yes, we are.
Okay.
And if we're not, that's okay. We're here, and that's
Yes.
what matters.
Three
Talking
topics.
to you. Three topics, okay. Well, first one, real quick announcement.
Does this count as one of the three?
No,
Okay.
it doesn't. We added a new person to our team, and I'm really, really happy to announce that we have Nancy Whalen on our staff now as a processor, and she's a wonderfully experienced person. She's a DE underwriter. She's very smart, very bright, and just a tremendous addition to our team. So I don't think she's here this morning.
That will help us with our processing times, get questions answered
Yep.
faster, and
Yep.
docs out faster, all sorts of good stuff.
Absolutely. So, first topic is just a reminder, if you're doing a 203K loan, it's really, really important that we do it right the first time. And what I mean by that is that let's get the proper people out there, and by people I mean an FHA 203K consultant, to do the initial inspection of the property. Because we need to make sure that up front, at the very beginning, we get all of the issues that need to be fixed on that property identified. Some of you have been getting your own contractors out there, and they're maybe not familiar with FHA guidelines or the 203K program, and they're coming up with these lists of repairs. And then when the appraiser goes out there later on, guess what? They're coming up with more things that the contractor who didn't know what they were doing wasn't aware of.
Maybe as an example, there's a broken window or something like that. There's no glass in it, or there's a stain in the ceiling that could be the result of a roof leak, that the FHA consultant would know to point that out and say that's got to be addressed and dealt with in this bid, for initial bid from the contractor.
Yep.
But the consultant doesn't go out, so you bring your own contractor in there, and the buyer says, oh, I can fix that myself after escrow closes. It's just a $100 window. I can take care of that. Well, guess what happens when the appraiser goes out and they call that item? Now the contractor's bid, who did not include that $100 window, has to be completely redone, re-signed by the contractor, by the buyer, a homeowner contractor addendum form. And every time you got to try to reach a contractor, I tell you what, it's another 3 days.
Yeah, slows things
they don't
down
have,
big time.
my experience is they don't have smartphones with fax machines and scanning abilities built into them. So it's a delay.
If you want to use your own contractor, that's fine. We can give them the comprehensive, all-inclusive list from the 203K consultant to do their bid from, okay? So that's fine, but at least they'll be bidding it off of all of the information that needs to be repaired for that property, okay? So let's not slow things down. Let's speed things up by doing it the right way.
We're out there closing these. These are great with an REO property where the seller won't do any work, or maybe it's a traditional sale where the seller can't afford to do any work.
Right.
But it works great.
Yeah, great program.
Second topic, right?
Yeah, you're doing something now that...
DU Refi Plus.
Yeah.
This is something we touched on before. It's really a great program. If your client they're not in the market to purchase, but you have clients, maybe yourselves, relatives, people you know, want to refinance their house, but they're upside down. They say, I can't get a loan modification. I can't do that. HAMP or HAFA or CHFA or Champy or whatever program it is. Hi, Cynthia Champy. How are you?
The Champy program.
The Champy. I like that. We have to come up with something for that. But they don't fall into those niches. They're still working. They've got a job. They're just upside down on their property. If their loan is currently owned by Freddie Mac or Fannie Mae, there's a good possibility we can still do that loan for them. They can be upside down 125% on their first, and they can have a second on there that could be...
Doesn't matter.
Doesn't matter.
Yeah.
And what's the catch? The catch is the interest rate's the same as a traditional purchase or traditional refinance. There's not a bump in the rate. You're above 80%, right, because their loan is 100% of the price of the value of the house. No mortgage insurance. That is hot.
Good deal.
The second, we can't incorporate that into the loan, but we can ignore it. They just have to, what's that fancy word? Subordinate to the first, which they always do, almost without exception. But those are some of the details. So if your client's underwater, don't worry about it. Call us up. We'll look up, see if their property is owned by Freddie or Fannie, and take care of them.
Yeah, it's a great program.
Alejandro, congratulations on the, what did you win?
Man.
Sunshine Cup.
Sunshine Cup.
Yeah.
With the lawn, the modification that they will be doing will, if it has a second, will the second be considered as part of the equity reduce the loan modification, or there will be a 100%?
It's not a modification.
Or
That's a good question. Will the second be considered part of that equity percentage? The answer is no.
Right.
So it's whatever that first is, up to 125% of the appraised value. The second can be anything above that.
Right. So you could have a home worth $100,000. A first mortgage, you could do it up to $125,000, and they could have a $50,000 second, which doesn't matter, right? So that's awesome with no PMI.
yeah, but still with the decline with the upside down.
Yeah.
Yeah.
But less upside down.
They're already upside down.
Yeah, they're already upside down. We can't change that. We
Right.
can't reinvent the
can't-
market for them,
right.
but they can get a better interest rate than what they currently have.
Yeah.
And help them make their payments.
Maybe
a little
lower
more.
their payment a little bit. That's the goal.
Yes, Wade.
A stupid question, but why would
What was that?
why would the second subordinate then get no refund?
But it's also about they might lose it.
Well,
They're not getting anything right now, so they might as well stay. They know they're not going to go into first position.
Right.
That'll never happen. The first won't allow that loan to close. So the second says, fine, okay, we still have no claim on this property. We're still not going to have any claim on the property.
And really, this is a no cash out deal. So really, they're not going behind a larger loan. Okay.
Well, except you can
The closing costs,
yeah.
but maybe a little larger. But they're not. The borrower's not allowed to take cash out. Therefore, putting that second lien in a less favorable position. Okay.
Well, it puts them in a more favorable position.
Right.
Actually, that's a good point. Patrick says it puts them in a more favorable position. Why? Because now the borrower on the first can afford to make their payments better.
Right.
Rather than defaulting on that. So.
Exactly.
All right, topic number 3.
Final topic.
You're up.
Speaking of CHFA, for those of you who don't know who CHFA is, it's California Housing Finance Agency, and they offer certain programs primarily for first-time home buyers and low moderate income home buyers. Well, they've just reintroduced a program that they used to have that's available with new construction only, so the builders are very happy about this. It's a down payment assistance program that allows the builder to use some of the school bond money that they have as a down payment assistance loan to cover down payment and closing costs. So this is a great new program. Again, it's not really a new program. They used to offer it, but they took it off the table for a short time. It's back out there again. And so for any of you that are working with buyers that are interested in new construction specifically, they're first-time home buyers, and they meet the low to moderate income income limits, this is a program that they might really get some benefit and value out of. So if you have questions, come see us, and we'll give you all the details about that, okay? You can call us, you can text us.
436-4020.
Email.
Or call the front desk and say, transfer me to Royal Charter Mortgage.
Yep.
Or look us up on the phone list. Or take our business cards from our desk over there.
Absolutely. We're here for you, and we appreciate you very much. You guys have a great day, a great
Thank you.
week, and go sell some houses.
All right. We're giving these guys some podium time, not just because they're hilarious and extremely informative, right? But because financing right now is going to be the most important thing as we get through this market. And every single program, the 203Ks, for example, I think in 2010, the volume of 203Ks was up 600% from what it was the previous year. So where there were 6,000 of them done the previous year, there were 30 some odd thousand 203Ks done this last year. So an important program. And one of our builders that came the other week did mention in brief this down payment assistance program. Just as a little education, every builder, when they start, when they break ground on a home, right? If it's a 2,300 square foot home, they have school fees to pay. Fresno fees are different than Clovis Unified, but Clovis Unified might be, $3 a square foot right now. And so, 2,200 square foot home, they're going to pay $6,600 in school fees. If that's the number. And what this program allows, Cheryl, is for the builder to use that money that they paid for school fees, right, an equal amount or a percentage, an amount of that to help your buyer with their down payment and or closing costs. So cool program, and it's going to run until they run out of money. Right. So anyway, please reach out, talk to your